I think it was finally time. You know, the financials have been under some duress. There was a great deal of concern that trading desks being what they are these days, the volatility might not help as much as they thought. So I think the earnings were surprisingly better than other people thought, and it should be able to lift the group unless there's a negative surprise that comes out tomorrow.
John, you're nodding. Do you think this is a buying opportunity now for the banks?
Yeah, absolutely. Particularly Citigroup. It's still trading at an 8% discount to its tangible book value. I mean, if you're trading at a discount to the book value, that means the market thinks your book value is going to deteriorate. But Citi is growing its book value really since about 2012 and on. So it wasn't a perfect earnings call. It wasn't a perfect earnings number, but it definitely wasn't as bad as the market was pricing in.
John Brady. So we got the China data, which was pretty disappointing in terms of the export numbers in particular, worst drop in 2 years. What other macro events are we watching this week? Because with the government shut down, it's hard to tell what economic data we're even going to get.
Well, sir, I think political instability globally will continue to be the main theme. You know, you do have a Brexit vote tomorrow, and your earlier guest suggested at the end of the day, Brexit may not even take place, but that will be a very difficult and challenging and volatile road until then. Likewise, too, talks to the market today about perhaps snap elections in Germany this summer. So the core of Europe starts to weaken. Italy still has its challenges. And of course, you still have this whole, conflict of nationalism taking place globally. So geopolitically and politically will most likely be the drivers of volatility moving forward here for investors.
The China data clearly a concern, but what do you make of Gordon's point that things could be so much worse than the data suggests? If that kind of came out and was confirmed over the next few months, how badly would markets take it?
Well, I think they would be concerned. What's interesting about it is a good deal of the deterioration in the Chinese trade is with Europe and with Japan, and not as much with us. I would also caution the viewers. The Shanghai market is right down at a trend line that supported it back in 2005 and 2014. It's a very long-term trend line. If you saw another 3 to 5% loss in Shanghai, we might be looking at a completely different market. So keep your eye on China as well as the Dow Jones.
To the downside, it would drag the U.S. with it.
Right.
I wonder, John Petrides, if the ongoing shutdown with no end in sight has any implications for President Trump's trade fight. I mean, he needs to make a deal with Congress. He needs to make a deal with China. Does it make it one more likely than the other?
Not yet. I mean, the longer that the shutdown happens, the murkier it's going to make the GDP numbers and the economic data. And if that starts to really head into a negative spiral downward, then it would impact it. But until then, no, I don't think it's an issue yet.
We just haven't seen that.
Yeah.